Bitcoin Market Outlook 2025. Price action, institutional growth, and global adoption. Bitcoin continues to hold its position as the most influential cryptocurrency in the global financial system. Despite its volatility, Bitcoin's dominance is shaped by several key factors: price swings driven by market sentiment, rapid institutional adoption, regulatory developments, technological innovation, and its growing role as a hedge against traditional macroeconomic risks. Let's dive into a detailed breakdown of Bitcoin's current state and what lies ahead. Current market overview. Over the past few weeks, Bitcoin, BTC, has experienced significant turbulence. After reaching a local peak near $117,000 in late August 2025, BTC saw a sharp correction, dropping below $110,000. This decline was not random. It was triggered by large-scale liquidations and a massive whale transaction. Reports indicate that a single entity offloaded around 24,000 BTC, worth nearly $2.7 billion, creating downward pressure on the market. Such events remind investors of Bitcoin's sensitivity to large holder activity, also known as whale moves. Macroeconomic conditions have added to the pressure. Concerns over stagflation, slowing global growth, and shifting interest rate policies are creating uncertainty across all financial markets, crypto included. Still, analysts point to potential recovery. Bitcoin could retest the $124,500 level in September, although historical data shows September is often a weak month for BTC performance. Despite this, social sentiment indicators are trending positively. Phrases like "buy the dip" are gaining traction, showing that retail and institutional traders alike may be preparing for another rebound. Institutional adoption and ETF growth. 1. Of the most transformative forces behind Bitcoin's sustained strength is its institutional adoption. Since early 2024, the launch of spot Bitcoin ETFs has completely reshaped how mainstream investors gain exposure to BTC. Spot Bitcoin ETFs have collectively attracted over $48 billion in net inflows, outpacing even gold-backed ETFs and most traditional U.S. ETFs. Major financial institutions like BlackRock, Fidelity, and ARK Invest have actively supported Bitcoin ETFs, encouraging portfolio managers to allocate a portion of their assets into BTC. This trend signals something critical. Bitcoin is no longer seen as a speculative fringe asset. It has entered the realm of regulated institutional-grade investments, which has cemented its legitimacy in global markets. With ETFs driving liquidity, volatility could gradually stabilize over the long term, even as short-term swings remain, part of Bitcoin's DNA. Regulatory and security developments. Regulation remains a cornerstone of Bitcoin's future. Governments and regulators across the world are working to define clearer rules for digital assets. El Salvador, the first nation to adopt Bitcoin as legal tender, recently enhanced the security of its national Bitcoin reserves. To counter potential quantum computing threats, the government transferred its BTC into upgraded wallet addresses with advanced safeguards. In the United States, the CFTC, Commodity Futures Trading Commission, is pushing forward frameworks that bring foreign crypto exchanges under U.S. regulations, signaling greater oversight and investor protection. The SEC's approval of multiple Bitcoin ETFs has also signaled a friendlier regulatory stance toward Bitcoin specifically, even as debates continue over altcoins and decentralized finance. This global regulatory progress is a double-edged sword. It provides legitimacy and security for investors, but it also introduces compliance costs and restrictions for crypto businesses. Nonetheless, regulation is widely seen as a net positive for long-term adoption. Mining and environmental considerations. Mining is the backbone of Bitcoin's proof-of-work (POW) consensus mechanism. Despite criticisms over energy use, the mining industry is undergoing a transformation. A growing number of mining companies are transitioning toward renewable energy sources such as hydro, wind, and solar. Regions with excess or stranded energy supply, like Texas and parts of South America, are becoming hotspots for sustainable mining operations. The competition among miners has intensified, with more specialized hardware, ASICs, and large mining pools fighting for block rewards. As Bitcoin's next halving event approaches in 2028, mining economics will tighten further, making efficiency and sustainability even more critical for long-term survival. Bitcoin's global role and community. Bitcoin's identity as digital gold continues to strengthen. With a capped supply of 21 million BTC and predictable halving cycles, Bitcoin remains one of the most reliable deflationary assets in the world. But beyond its role as a store of value, Bitcoin's utility is expanding. Cross-border payments in regions with weak financial infrastructure. Inflation hedging in economies with unstable local currencies. Educational efforts that spread awareness about blockchain technology, privacy, and self-sovereign finance. The Bitcoin community remains one of its biggest strengths. Developers continue innovating, while grassroots movements promote adoption in places where traditional banking is limited or inaccessible. Outlook: what's next for Bitcoin? Looking ahead, Bitcoin's trajectory will be shaped by three main factors: macroeconomic conditions. Inflation, central bank policies, and global liquidity will influence Bitcoin's short-term price movements. Institutional flows. Spot Bitcoin ETFs and corporate adoption will determine how much long-term capital flows into BTC regulatory clarity. Countries that establish clear, balanced frameworks for crypto will likely become global hubs for Bitcoin innovation. Investors should expect continued volatility in the near term. Whale movements, ETF inflows, and global economic shifts will all play a role in Bitcoin's price discovery. But in the big picture, Bitcoin's resilience, capped supply, and expanding adoption make it one of the most compelling assets in modern finance. Final thoughts. Bitcoin has evolved far beyond its early days as a digital experiment. Today, it is a recognized global financial asset, integrated into traditional markets while still holding true to its decentralized roots. While risks remain, ranging from regulatory crackdowns to macroeconomic downturns, Bitcoin's technological foundation, community-driven innovation, and growing institutional support position it as a long-term force in global finance. By staying updated with reliable market analysis, trusted news outlets, and on-chain data, investors and traders can navigate volatility with greater confidence. Bitcoin's journey is still unfolding, and for those who remain engaged, the opportunities ahead could be transformative.